All right, let's talk about one of the biggest challenges for pretty much any trader out there. What do you actually do after you've entered a trade? We're going to replace all that dangerous guesswork and improvisation with a really simple but powerful framework called the trade management ladder. So let's build it step by step.
So first things first, let's just challenge a huge assumption. Most traders think that being active means you're being effective. You're constantly tinkering with your stops, adjusting your targets. You're always doing something. But what if all of that management is actually the very thing that's hurting your results?
So I want you to be really honest with yourself here. Think back to the last time you changed a trade midstream. Was that action part of a pre-written plan? Or was it more of an emotional flinch because the price started moving against you? Was it disciplined management, or was it just a gut reaction?
And this slide just lays out the difference perfectly. On one side, you've got reactive trading. It's all emotion, it's chaos, you're just making it up as you go. But on the other side, you have disciplined management. It's pre-planned, it's calm, it's structured. Reacting turns all that meaningless market noise into very real losses through fees, slippage, and just total emotional burnout. A disciplined plan, well, it just sticks to the script.
So the big question is, how do we escape that reaction trap? Well, the answer is a surprisingly simple framework, the trade management ladder. It's designed to completely remove improvisation from the equation and replace it with a really clear, disciplined set of choices.
That's it. 3. The entire framework for managing any trade you are in right now boils down to just 3 valid actions. And its simplicity, that's its greatest strength. And here they are, the 3 rungs of our ladder. Do nothing, reduce risk, and exit. Now, here's the crucial point. If the action you're about to take isn't one of these 3, it's not management. It's just a reaction, plain and simple.
Now, the secret sauce that makes this whole thing work is that the rules for when you're allowed to take each of these actions, they're defined before you even think about placing the trade. So let's break down each one.
We're going to start with the default action. And honestly, it's the hardest one to master, doing nothing. Now, this isn't laziness. It is the ultimate act of discipline. It means that you trust your plan and you are letting it play out exactly as you intended.
You are only allowed to do nothing if these specific conditions are met. First, your core reason for the trade, your thesis, is still totally valid. Second, your absolute stop loss, your invalidation point, has not been touched. And third, any price movement we're seeing is just normal volatility, what we call your noise budget. If you can't sit still when these conditions are met, your plan just isn't solid enough.
Okay, moving to the next rung up, we have reduce risk. And this is a really critical distinction. This is not about trying to save a losing trade or feeling like you need to be right. No, it is a purely defensive action to protect your capital, and it's based on triggers you've already defined.
And here are those triggers. You can only reduce risk if, for example, a time limit you set for the trade has been hit. Or maybe market liquidity is drying up, what we'd call execution quality degrading. Or maybe your thesis is still okay, but it's weakened in a specific way already planned for. By the way, any action that increases your risk is not management, ever. The final rung is exit. And this one is simple. It's absolute. It is the most non-negotiable rule in your entire trading plan. Most strategies don't fail on the entry. They fail right here, on the exit.
And this quote just says it all. I want you to burn this into your mind. If invalidation hits, exit. No debate. There is zero room for hope here. No second guessing, no improvisation. The plan is broken, so you get out. Period. End of story. Okay, so we've got the theory down. Now, let's make it practical. How do you actually build this ladder into your process before you ever click that buy or sell button? It all comes down to this one simple rule. You have to write it down, because your brain will trick you in the heat of the moment. Your emotions will absolutely hijack your decisions. If your plan is not physically written out somewhere, you are guaranteeing that you will improvise. So here's a simple blueprint for every single trade you take. You have to define your thesis, your hard invalidation point, your noise budget, and any time limits. And then you explicitly write out the rules, the conditions for doing nothing, the specific triggers for reducing risk, and that non-negotiable exit rule.
And hey, for those of you trading digital assets on decentralized exchanges, here's a super common ladder violation. If you have to keep raising your slippage tolerance just to get your trade filled, you're not executing a plan anymore. You're just accepting a worse and worse outcome. Your plan should say reduce risk or no trade when execution gets bad, not keep paying more.
So as we wrap this up, I really want to leave you with the core message of this entire explainer. The strategy isn't just about finding good entries. The real strategy is having the discipline to execute your plan perfectly.
And here's the big takeaway. For a lot of people, this is going to sound completely counterintuitive, but it is 100% true. The highest skill, the most profitable action, and the most powerful form of trade management is often doing absolutely nothing.
So let's just run through that ladder one last time. Remember, your choices are limited by design. Number 1, do nothing. That's your default when the plan is on track. Number 2, reduce risk. That's your defensive move based on a preset trigger. And number 3, exit, the non-negotiable end when your plan breaks. That's it. There are no exceptions.
And I'm going to leave you with this final thought exercise. Your plan is written. Your thesis is intact. Your invalidation point is nowhere in sight. The price is just bouncing around. What is your next move? If you've been following along, you already know the answer.
And finally, our standard reminder, this is all for educational purposes only, and it is definitely not financial advice. Trading digital assets comes with significant risk of loss, so please always do your own research. Thanks for tuning in.